Hello and welcome and hello to a very special weekend edition of Un Poco Mas, the show where we give you just a little bit more. And if I wasn't showing you, we have breaking news, guys. Breaking news. As you know, the Oscars were last night. And this is a shocker, guys, because there were so many great candidates. For the honor of the Oscar of Worst Acting by a Stock Analyst. And there were a lot of nominees. The Chipmunk, Midwest Values. I believe there were many others in the running, but in the end, the award, of course, went to the bologna sandwich and the chia pet. And well deserved, folks. Well deserved. It is an honor. It is an honor to take home that Oscar for the worst acting performance by an analyst. And the reason I say it is the worst acting performance is because, folks, that's exactly what this is. It's theater. It'll become very clear to you that some of the analysts take a look at the company. Hey, folks, what's going on? It's your old buddy Danny Deals. Welcome to Un Poco Mas, basic bitches. Hello and welcome. Before I get started, I would like to thank Princess J, who is absolutely the best person on earth. I'd like to thank J Money, aka Not a Lurker, the man with the golden wrench, who, if you get out of line in my chat, he's going to slap you upside your stupid fat head. You ain't gonna get stupid rich. You're gonna get a wrench upside your head. Sorry, I just spit on my keyboard there. But anyway, guys, couldn't come to you yesterday. Just way too busy with work and life. Ended up doing some other stuff that didn't involve stocks, guys. What a week! This is the week in review. It is where we just discuss how weak the week is. It's a classic pump and dump, guys. Classic pump and dump. If you go to my tile, you'll see a gas pump and then this magical buff guy taking a horrible shit. And then you see Honest Abe, Honest Tony here on the 2 cents represents the 2 cents we had for earnings. The week is represented by hope, excitement, and then an absolutely swift kick with a steel toe boot into both testicles. Folks, it's the kneecap recap. It's the real deal. It's the week in review, guys. Toper time check. Toper time check. That's a fat guy telling you what time it is for all of you who don't know. Oh, fuck me in the goat ass and suck me sideways. It's 1:52 in the PM out here in beautiful sunny Los Angeles. I hope it's an absolutely great day wherever you are. Yes, thank you for the reminder, Princess J. Once again, thank you for your love and support in making this channel possible. J Money, Not a Lurker, again, once again, thank you for your support, holding us down in the chat. Guys, I want to talk a little bit about earnings. I want to talk a little bit about the personalities on SoFi Weekly. Of course, I want to talk Steve. I'm a huge Steve fanboy. A lot of people noted I was went out to dinner, had some other stuff going on, some other business stuff yesterday. So I had to catch the replay of SoFi Weekly today. And yes, Steve was kind of fired up. Steve's like, he was doing like, I think a little bit of a passive aggressive thing. We're like, come on, guys, bring it to 5. Just take it to 5. You know, he's like, when I was reading between the lines of how confident and sort of a little bit angry Steve was, when I read between the lines, and I'm really good at that, I'm really good at kind of, profiling and watching people's behavior and watching their facial expressions and watching their physical movements, watching how they're looking, how their eyes are looking to sort of tell how they're feeling. And Steve was like a little bit pissed. It's kind of how I hear Noto when he talks about the Bears and he just wants to say, hey, fuck you guys. And even Tevis was using some profanity. God, God, I love that. But Steve, when I was reading between the lines, he was like, he was laying out the data and he was laying out his case, for just in a few years, how SoFi's multiples are already going to be undervalued by like, in the bull case, they're going to be tremendously undervalued by 2026. I mean, even the bear case, it's not really coherent because, like a bear like the Chia Pet, who won the best Oscar for worst acting by a phony analyst, and that green wig just kind of cracks me up. But guys, I'm all over the place today. What else is new? Um, but fear not, guys. Fear not. This was a classic pump and dump. And remember, everybody's like, "Oh, you're so stupid. You were wrong." I said it a million times, guys. If it runs up 20%, it's a pump and dump. I sold last time at 1160. I didn't sell my shares this time, but I flipped my options. I flipped my calls right away. I made 170%. And I can show you guys the screens on that. People are like, oh, I don't believe you. I don't believe you beat the market. I don't fucking care. You know, fuck you guys. Like, you don't pay my mortgage. You don't pay my bills. You don't know what it costs to live down here on the beach. And like, oh, you just live like a normal, everyday. Yeah. You got to make a fucking fortune to live down here like you're some peon douchebag. Anyway, guys, sorry for my little rant, but hello and welcome and welcome and hello. Not a lot of you idiots here on a weekend, and who could blame you guys? This is more for my therapy session, so Princess J does not have to listen to me any more than necessary. You could imagine how painful it must be for her. Guys, welcome and hello. Alberto, Beach Boy, Ian, Roland Dubs, my fellow Raider Nation, also committed to excellence. A lot of pride and poise, Roland Dubs always shows, and I appreciate that. Outdoor Creations is here. Should have bought 747. Yeah, I mean, Outdoor Creations, we keep saying that. I mean, how many fucking times have I said, oh, it's your last chance to buy under 10, rocket ship emoji? You know, I gotta, like, we keep saying that, but obviously they attacked it here. They're happy to attack it. And here's what it is, guys. It doesn't, earnings matter. Okay, all these earnings where they keep knocking it down, it's like an unpaid debt. It's like the shorts and the bears, they go, up, we were wrong. I'm going to put this one on a credit card. Up, we were wrong. I'm going to buy now, pay later on this one. Up, we were wrong. I'm going to finance this with a firm. Oh, and I'll take another Peloton bike because I need another place to hang my laundry because I'm a big, fat, lazy asshole. Okay? So give me another Peloton bike. Oh, wait a minute. Noto turned in a huge beat. Noto made a net profit. Who cares? Who cares? Sell it off, short it. Did you guys see what this borrowing looked like this last week? I mean, do you guys have a fucking clue what's going on? I think my screensaver came on. Give me a break. Who has a screensaver in this day and age? What do I have? A CRT Sony 40-inch monitor that weighs like 800 pounds. Do you guys remember what those big Sony TVs weighed in like the 90s before everything was LED? They were like 6 feet deep. They had, I think there were like several little people in there like turning a hamster wheel to make those fucking things work. I mean, I was a pretty big, strong guy in my 20s trying to carry one of those up the stairs. Those fucking Sony Trinitrons. Fuck me. And all the weight was in the front on the screen. There's no place to grab on. So you're trying to hold on to that corner speaker. It's so sharp. You're just digging into your palm, but you don't want to let go. You end up looking like Jesus, just palm punctured. Oh my God. Oh, what an ordeal. Anyway, guys, back to the point at hand, of course, which is the SOFI stock, ticker symbol SOFI. But the point is, guys, if anybody knows Anthony Noto, Tony Notes, my biological father, first tell him I forgive him for all the child support. I waited for years for him on the set of Maury. He was supposed to show up and, own up to that paternity test. And Maury was going to say, Anthony Noto, you are the father. And I was going to say, let's go have a catch up fully fielding. Like, I do not know this child. We are roughly the same age. All I know is we have 10 quarters of gross adjusted EBITDA improvement, and this fat little bastard can pound sand, kick rocks, and get the F off my stage. He's like, Maury, let's talk adjusted EBITDA. Let's not talk fat, fatherless children that I may or may not have fathered a Ramada in back in 1952. Guys, neither of us were alive. Of course, Anthony Noto is not my father, but he is a very talented chief executive officer. I often say we almost have two CFOs because this guy knows the numbers so well. And that brings me to I'm going through my stupid unpaid debt argument, but that debt is going to come due. These good ERs become cumulative. So, hey, we started the price at 750, had a great ER, drove it up 22%, shorted a ton of shares, borrowed a ton of shares, churned 300 million shares. And every time they just wreck the stock, and it's not, retarders dump in the churn, retarders dump on stop losses, but most of us retarders, even if we're dumb, we've become stubborn, we've become angry, we've dug in our heels. Guys, if we didn't dump our shares at 5, why are we going to dump our shares at 747? 747 coming out of the sky. I'm not dumping my shares on the basis of a big lie. Sorry, guys. My improvisation skills have diminished considerably, as has my cognitive abilities. I'm like, boat, man, guitar, Olive. Who's like, Did I get it? Yeah, I got it. Okay, good. Um, vote for me. Anyway, guys, so the options are not telling me there's going to be a big push down. Everybody say, I heard the guys on SoFi Weekly, you know, Steve obviously is the smartest guy in the room. He's a little bit angry. He's talking about, go ahead, suckers, push it to 5. I'm going to go all in. Tevis is talking about, you know, if they do something stupid like push it down to 4s again, you know, he's like talking about he might sell most of his Tesla position, you know, and he's talking about going all in on SoFi stock. And frankly, Tevis is a very smart numbers guy. I mean, you know, you could make an argument against some of his facial hair choices. You know, when you're deathly ill, shooting the webcam directly up your nose to give us a culture view of the mucus and just the situation there. I'm not saying the man makes every single perfect decision. I'm not saying he walks on water. I'm not saying he's the Canadian brunette Jesus. I'm not saying any of that. But what I'm saying is when somebody who has sort of a conservative numbers-based worldview tells you, hey, come on, suckers, I'm calling your bluff. I'm calling your bluff, you blowhard, lily-livered, two-bit pieces of shit. Go ahead, drive it down to 5, Steve's telling me. Tevis is like, no, don't drive it down to 5. Drive it to 4. I'm going to sell my Ford Fiesta. I'm going to get 800 Canadian euros or whatever the fuck you guys use up there. And I'm going to dump it into the SoFi stock, eh? Well, if I get them, I'll get a case of Molson and then I'll dump it. Why don't any of those guys have those funny Canadian accents like Dave Thomas and Rick Moranis? SoFi Weekly would be far more enjoyable if it were, you know, what were those guys named? The brothers who drank the beer. It was Rick Moranis and Dave Thomas or somebody brothers on SCTV. God, there were so many funny skits on that fucking show. God, I love Canadian people. I generally don't like white people in America, just upper middle class, because they're such Karens and we just complain about everything. We're just big, fat, lazy turds. But Canadians, I don't mind. You know, I hate everybody, but I hate them maybe a little bit less than other people. I don't know if that makes any sense. I love maple syrup. I love the down home folksy wisdom. I don't really like moose meat, but that's a whole nother discussion. So, guys, let me move through this absolute train wreck of a live stream. But you can see, guys, the short volume slowed down on Friday, and they pushed it down real low all the way to 747, and then you know, aggregate ratio was 42, and then the volume was 24. So that's the lowest the volume itself had been anytime that week, going all the way back to the previous Thursday. But the volumes, of course, were a lot lower. And then you see these ratios starting to come back down to where they were about 3 to 4 weeks ago. It's still short, still borrowing on the net. I mean, there's no question about it, guys. Look at the shares on loan, 144 million. Short interest, 124 million. Percent of free float, 13.6. So they haven't gone anywhere. Friday borrowed change was 3.77 million. So they borrowed. Thursday they supposedly returned 450,000 shares. Don't believe the hype. Don't believe the hype. It's a sequel. Dude, you call 911, they're not coming. It's a joke. Don't believe the hype. Some of those Public Enemy was just fucking absolutely fire. But anyway, so 4 million again, basically a wash on Thursday. So they're just digging in deeper and deeper all the time. Cost to borrow max was unusually high at 3.14%, and average was over 1%. That's almost always under 1% because there's so many shares of SoFi. The float's so huge. It can't squeeze. It can't go up. That's why these turds churned 300 million shares, right? And that's why people like high frequency trading is illegal, guys. Give me a fucking break. Who are you, Pollyanna? Naive Steve? I got a bridge to sell you fucktards because high frequency trading is a reality. You think retail is dumping 300 million shares on that, creating that pump and dump? Drawing stupid people in at the top, and even more than that, they're getting stupid people to buy calls at the top. So many calls. Look, these options are telling you, look at what, I bet Max paying, what is it, $8 again? Of course it is. So it's $8 again next week, and it's the same distribution. Puts are down, you know, basically at 750, 7, 8. Calls are heavy at 8, also at 750, 850. So it's kind of that normal distribution, but it's not super heavy volume, guys. So you can see like this is for the 9th. So way too many calls opening up at 8. I mean, 20,000 volume. Open interest wasn't that high. Yeah, all these are closed. Like everybody gave up on these after earnings, but I don't know, guys. Like when they make these runs at 20%, like retail was in there buying those calls. It just gave them every incentive to not just do a little bit of a dump and accumulate, but they're just like, hey, why not just kill this thing? These dumb retarders are gonna keep buying these weekly calls. Doesn't matter what we do. They don't know how to get leverage any other way, so this is what they do. They don't just want to buy shares because it's too boring and it takes too long to invest properly. So they're just going to do this. But then the puts coming in, they're just at 7, a few at 7, but mostly 750 and 8 is even heavier. So there's just no big push down coming. The options are telling us they're just going to trade the stock sideways. What else is new? So could be that SoFi has kind of moved the channel. Everybody wants to assume that channels are like fucking Paleozoic, Mesolithic, layers of strata, fucking limestone in there, little dinosaurs. It doesn't necessarily mean they're perfectly horizontal, guys. I mean, they love to bleed this thing sideways, so it's quite possible that we could gain some support where there was resistance, and then we could be in a channel that moves somewhat downward and to the right. Bleeding, as we like to call it. But, I mean, guys, the stock's still not in bad trouble. It's just kind of exactly back where, it was finding support here. I don't know when this is. God, what's wrong with me? Sorry, guys. This is back, of course, in June and then July. I was finding support here. It's kind of where we are right now. And then, so found support there 3 times, and it's trying to find support there again. It's kind of triple bottomed in this weird, I don't know, kind of flying W. Everybody wants to put names on these charts, guys. Charting these pump and dumps and these daily dumps and with all this borrowing, it's just a fool's errand. This is not normal market behavior of response to technicals or fundamentals. They decided to do this before the ER ever came out. I mean, I think they thought SoFi would break even or make a penny and there would be, stronger arguments they could put up against the stock, but at the end of the day, the stock is basically, okay, 780 level. That's basically very close to where it topped here in August 2022, topped here. So as long as we can hang out at this level and then, consolidate, gather, and then push back up, the stock's going to be absolutely fine. I think the guys on SoFi Weekly are saying, it could break down to 3, it could break down to 4. Um, if there's calamity in the economy, if we see war, if we see a major recession that just leads to a complete breakdown in in the loan book, of course that could happen. I mean, if SoFi goes back to making large losses, of course the stock's going to get hammered. Um, I just don't see that happening, guys. I do want to bring to your attention the fact that there is now a SoFi cowbell. I don't know if this really helps anybody. It certainly does not help Princess J or anyone in the adjacent offices, but I have was trying to use a silver marker and that didn't really work because that marker is about 15, 20 years old. And then so I drew that, and then over here we have the Cow Pie Hall of Fame, which is filled with some of the best analysts. I think this was everybody who was nominated for this worst worst acting Oscar by a buy side analyst, of course. And anyway, so guys, I'm just a complete idiot. I saw this at this news store. I'd never been to Five Below, and then everything's $5 or below. And I was like, who has a SoFi Blue cowbell? Not really SoFi Blue, but anyway. That's neither here nor there, but that's just the kind of personality you're dealing with on this channel, is just somebody who's going to go out and buy a SoFi bell and then write the turd pie, the cow pie Hall of Fame on the back and just list a bunch of analysts who happen to disagree with me, which is, of course, they're right. So this is just another article. Old Marty Struble, old touchdown Marty Struble, looks like the dad from Back to the Future. Looked like, say, he's just been locked away. Has probably been a graduate student for about the last 45 years, just toiling away in some lab somewhere looking for something that's just never going to happen. He's got that kind of look, kind of quiet desperation, but that is the English way. So that's neither here nor there. Sentiment can shift. Okay, this is run for the hills, says Morgan Stanley about SoFi stock, and this is Midwest values. This is old touchdown. This is old touchdown Bunko Adelson. Old Matt Hughes' little brother after it got beat up in a bad wrestling match. So sentiment can shift fast on Wall Street. Something SoFi investors can tell you about. It's sentiment can't shift. These are mechanics hatching this stuff. And these analysts are part of a big deception machine that takes money from weak retail investors and puts it in the pockets of big banks and hedge funds. And that's what's happening here, guys. They're playing these huge swings. It doesn't affect institutions. They know what's going on. They're not affected by analyst ratings. It's all you weak-handed fucks. You guys can't hold your liquor. You're a bunch of turds. And oh, hey, I just bought at 9.15. I'll just sell at 7.49. Just put in a stop loss, honey. Hey, honey, what's for dinner? I just put in a stop loss on SoFi at 7.49. Well, we're having chicken with rosemary, you weak turd. That's why you always lose money in the markets. Every year you're losing and you're watching, you're leading us to financial ruin. And then after that, we have a nice fudge cake. It's like, sounds great, honey. Let me just put in a stop loss here on Tesla at 185. Let me show you something. I just bought at 250. I'm only losing $80 or $70. Look at me. Fucking guys, I wish I could punch every single investor in America in the face. Just knock some sense into you. You're so fucking dumb. Oh, I hate you guys. Let's go on with the article, though. Don't let me bring you down. The week began on a high note after Neobank's 4Q 2023 print. I love the way this guy talks like he knows what the fuck he's talking about. Oh, these assholes. Showed the company had swung to profitability as per its promise. Shares responded accordingly, soaring by 20%. I think they were up like 24%. Since then, a big chunk of those gains hand back to the market. Morgan Stanley's Jeffrey Adelson, aka Midwest Values, put the boot in an intriguing twist. Adelson, ew, an intriguing twist. Oh, oh, my, you've piqued my interest. Go on. In an intriguing twist, Adelson, who had upgraded the stock to equal weight, i.e., neutral. Oh, thanks. Thanks for that fucking parenthetical analysis of fucking obvious. God, I fucking hate these guys. Sorry. Rating just 3 months ago, he has reverted. So he saw a quarter of great growth, profitability, upswing in tech. He just didn't like what he saw. Furthermore, he has lowered his price target from 7 to 650, indicating a potential downside of 17.5% for the stock. To watch his track record, spread your cheeks and shove your head up your own ass. Outlining the pessimistic take following the Q4 readout, the analysts believe the stock is pricing in too much optimism on the path to 2026 profitability laid out by SoFi, all while staring in the face of a worsening top-line growth outlook for 2024. Oh, fuck. Looking beyond 2024, Adelson goes on. Even this guy's writing is fucking terrible. His transitions, it sounds like a fucking junior high school C plus student. Guy can't fucking write. I used to write different things professionally. This is fucking moron. Looking beyond 2024, comma, Adelson goes on to add, we believe there is more downside risk than upside to the medium-term outlook, which implies a meaningful reacceleration in top-line growth to 20. Goostraba. Goostraba. It's been a long time since I've just beat a man severely who didn't deserve it, but they're trying to drive me there. Like, okay, listen to this sentence. A meaningful reacceleration in top line growth to 25%. Top line growth in the quarter that just ended was higher than that. The year that just ended, it was in the 30s. So 25% would not be a reacceleration. Your math doesn't work. So you have to say they're going to grow 15%. You have no basis to believe that. Management's telling you 25, they always under promise. You fucking turd. In addition to turn to profitability, Adelson puts the post-earnings rally down to an overall revenue guide implying around mid-teens growth and significantly exceeding the bears' expectations of a sharper slowdown. And I love the way he puts these things in quotes, a sharper slowdown. This fucking guy, a kindergarten teacher? Ah, these terms, emphasizing these terms. Why doesn't he put them in italics? Emphasis added. Emphasis mine. Maybe we could read it in Braille. Fucking asshole. However, Adelson thinks lending revenues, the biggest part of the business, will likely shrink more than consensus expects. SoFi called for lending revenues drop by 5 to 8%. Adelson was expecting a 4%. Oh, wow. And says consensus was too optimistic with its call for 10% growth. Listen to management, listen to management, listen to management. They're telling you that financial services and especially tech are going to take up the slack and do so at better margins. Just listen to management. Listen to management. The overall problem is that fundamental factors influencing lending continue to head in the wrong direction. These include slowing originations. Okay, they're slowing lending by choice. Remember, capital constraints still largely in place. They are not capital constrained. That is complete bullshit. Reversals of previously recognized loan growing marks, that hasn't happened yet. Credit losses quickly ramping towards SoFi Life of Loan targets 5%. Okay, that is happening. Lending Club also reported another drop. Okay, Lending Club does not have the same quality of loans as SoFi. I've looked at these. They're not terrible, but they're not in the same they're not in the same quite credit scores as SoFi. So going over those loan originations to slow, and I want to go to my notes because I have some notes up here. So loan growth slowing is a decision. Loans have finite margins. They carry risk. Going forward, they carry risk to the balance sheet, to their capital ratios. So management's making less loans by choice. It's not that they couldn't lower standards and make more loans. They could probably make more loans at these standards. They have extremely high standards for personal loans. Um, Okay, this is the real crux. SoFi management has been talking about tech RFPs the last 3 quarters plus. SoFi management is telling you that tech is getting ready to explode. Okay? The bears are telling you management is wrong. Now, I don't want to read any more of this bullshit. It's just absolute worthless drivel. I mean, Midwest Values looks like a moron. I know he went to Cornell and he has a very good resume. He's probably like way smarter than me. He probably knows infinitely more than me. But again, it's a disinformation machine. You know, it's a complete disinformation machine. The bowling ball hairline comes out on January 2nd when everybody's on vacation and makes his downgrade to 650, and that's bookended by Midwest Values at January 31st making another downgrade to 650. Almost an identical downgrade. Is there any critical thinking among the bears? Oh, I'm still at 3. Wait, another quarter happened. Oh, nope, I'm still at 3. Wait, you adjusted all your earnings. You're calling for 30 cents in 2025. Nope, I'm still at 3. You just get it to put it on the page. You're not even analyzing anything. There's no data. There's no serious analysis. You can tell which analysts are doing serious analysis. You know, like Mizuho, like the baby seal, touchdown Danny Dolev. That guy's doing real numbers. Management is doing real numbers. So going back to the tech explosion, okay, bears management either has to be wrong and fundamentally misunderstand their own business and not know where these RFPs are and not know who these clients they brought on the last 6 months are and not understand those margins, not understand that growth, and just be giving bad guidance for 2024, 2025, and 2026. Alternatively, from management being mistaken, the bears' other flip side of their coin could be management is lying. Okay, does that make any sense? Why would management, who needs to make certain benchmarks by 2026 to get their preferred stock units at $25 and then later at $45, why would they want to crash the stock in like 2025? Because that's what would happen. If they lie about tech, if there's no growth, if they don't pick up that slack from lending, then the stock is going to crash, and rightly so. Because all of us are betting on that hybrid valuation. Is that we're not even being valued for the growth as a bank right now. Look at Steve Fiorio's chart from SoFi Weekly just the other night. Go back and watch the show. Jay Money sent it to me. Like if you go out, if you look at their estimate of 80 cents, by 2026, they're dramatically undervalued. And that's another point. They're acting like management is putting themselves in a box. They're guiding from 55 cents to 80 cents. Okay, that's a huge difference. Even the Chia Pet put them at 30 cents for 2025. So for them to get to another 25 cents profit, another 6 cents per quarter is not out of the realm of possibility. It's not unreasonable. These guys' own math doesn't work. As Sandy Bullock, America's sweetheart, said, the profile doesn't fit the profile. Don't you guys understand? Haven't you seen Murder by Numbers? These kids just want to kill somebody just to see what it's like. They're rich suburban kids. Their parents are off in Europe. They're remodeling the house. Sandy Bullock is there. She has sex with all her partners once, then cuts off their heads and puts them in her closet. The profile doesn't fit the profile. Huh? I was like, he was like, and I was like, oh God, does nothing make sense? Certainly not this show, you freaking turds. Here's what analysts are forecasting. This is simply Wall Street. Take a look at this. Like analysts forecasts and bottom line. Just read the bottom line. The most important thing here is that the analysts upgraded their earnings per share estimates. These numbers, $3, $4, $6.50, that's all fucking manipulative noise. That's all FUD. It's all bullshit. They're same way kind of 15 is just arbitrary. What really matters is how much money is the company going to be making. And SoFi is going to be making a ton of money. So is management lying about tech? Does that make any sense that everyone will know they're lying in a year or two when they need to make those PSUs come alive? So why would that make sense? Why would they want to crash the stock? Are they trying to pump and dump it this year? Obviously that didn't work. So they're wrong. So the bowling ball and Midwest Values and the Chia Pet and the fucking bologna sandwich understand the tech company, understand Galileo better than White, better than LaPointe, better than Anthony Noto, my biological father. Is that what you'd have me believe? Is that the hash you're trying to sling? Is that the used vehicle you're trying to sell me? It doesn't look anything like the picture. You don't look anything like the picture. You're fatter and older and you have more gray hair. Want to get some pizza? Hey, come back. You forgot your purse. Um, anyway, no, we've all been there, guys. A little bit of online dating humor. In any case, guys, welcome and hello and welcome. Thank you for tuning in to this weekend edition of Un Poco Mas, where the jokes and incoherence are at just completely unacceptable levels. Okay, so they upgraded the EPS. They also downgraded technology SoFi revenue estimates, but industry data suggests they're going to grow faster than the wider industry. That's important. They're taking market shares from their peers. Still, earnings more important than intrinsic value of the business. No real change in consensus price target. Hasn't got any major changes. Keeping that in mind, we still think the longer-term trajectory of the business is much more important to investors to consider. We have estimates from multiple SoFi Technologies analysts going out to 2026, and 2026, I mean, even the bears, their estimates suggest to me that SoFi is quite dramatically undervalued. If we go over to Seeking Alpha, which again, I do like most of their authors, again, not that Gary Gordon Bulliam-headed guy, but, generally speaking, they're pretty good. To draw your attention, of course, back to the Un Poco Mas tile, we want to thank all the five heads. You have five head. This would have been five head Ben Affleck, and then you would have had five head Matt Damon. It's more of a bowling ball head. It's kind of reversed, but they won the Oscar for bad acting by a stock analyst in pursuit of a pump and dump or short attack. There you have Anthony Noto on the penny, of course, honest Anthony. He cannot tell a lie. This was in his period between stints at Goldman Sachs and, of course, the NFL, when he did win several Tony Awards for his portrayal of Michael Dukakis in the Michael Dukakis story. And frankly, I have not seen better acting since the latest Adam Sandler film. It was that good. And Noto looked exactly the same as he does right now, even back in his 40s, 30s, and 20s, and even as a small boy. So anyway, guys, welcome and hello and welcome. Not sure where I'm going with any of that. Couple of good articles out in SoFi Weekly. Let me check my notes again. So this is why it doesn't make any sense. Why would management lie about 2024 and 2025 when they need the pump in 2026? If anything, they would stick to their guns for the next 2 years, grind it out, tell the truth, and then start pumping with ridiculous estimates in like 26, 27, lie about 29. They could pump the stock then and get their shares. Like pumping the stock and then crashing it now doesn't make any sense for management unless you're Rochelle and you're just going to dump all your fucking shares anyway, like an asshole. Let me see what else is on my notes. Head fake. Oh yeah, somebody was asking like Tech Galileo. Blah 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 blah. Oh yeah, guns and butter. That's what I'm saying. You're asking Anthony Noto. Sorry, I craned my neck. I think. Oh God, that pop hurt. So Anthony Noto is giving you guns and butter. He's giving you profit. Um, oh shit, I have to get off this. He's giving you profit. He's giving you growth. He's giving you everything you're asking for. He's giving you tech. Growth in tech, which is what he's promising, which should lead to a hybrid valuation. But let me get off this thing as soon as possible. These are two very good articles. They make a lot of the same points. Ryoto, SOFI, and SoFi's flawless execution set to eliminate the bears. Talking about bears should be careful, how a lot of what they're saying doesn't make sense, how the overall growth trajectory is clear. Record-breaking performance driven by expanded member base. Member growth is sorry. Member growth is important because the number of members is leading indicator of future growth. The more members that SoFi can monetize through its different products, and of course, members are the people, spending the money. It's kind of an obvious point. I don't know why I read that. Q4 lending revenue was $353 million, up 8% year over year, which is pretty impressive given the economic conditions. Q4 loan originations grew 45% year over year to $4.3 billion, but was lower quarter on quarter. And that's fine. I don't, the bears say, hey, you're making too many loans, it's too risky, your balance sheet's out of whack. Then they dial back the loans, start promoting their other segments, and the bears say, oh, that's bad because the loan rate, the loan originations are coming down, which is exactly what they asked for indirectly. Because if you're saying they're making too many loans, you're saying they should make less loans, ergo heretofore ipso facto. But their logic doesn't work like that. They're saying, hey, what you just told us we need to do, we're doing, and then you're penalizing us. What are we, a penal colony? Do we just like to say penal? Oh God, guys, I'm sweating. I think the people below me left the fucking heat on. Below me down. Anyway, guys, year-on-year growth, talking about the tech platform. Tech growth wasn't huge, but it's heading in the right direction. Financial services was up 139 million, 115% year-on-year, which makes 6 consecutive quarter of triple-digit growth. Truly astounding. Strong adoption, 45% year-over-year growth in product adoption and 9.5 billion, as well as improved monetization. With revenue per product, this is critical. Improved monetization in financial services. Revenue per product up nearly 50% year on year to $59. That is worth reading, guys. That's incredible. Revenue per product up 50% year on year to $59. What's worth mentioning is the segment exceeded 1.5 billion in point of sale debit transaction volume in Q4, which is up 3 times year over year. The activity, the churn, the banking, the direct deposits. SoFi's growth is undeniable. Their trajectory is on the right track. All the stuff they criticize is transient, temporary bullshit dictated by the macro. It is nothing wrong with SoFi's business model. Nothing wrong with their management. The criticisms are FUD. They never look at the numbers on the ER. They always look forward and speculate. And most of the time, the bears are wrong. All in all, a very strong quarter in terms of growth, record revenue, record members, record products, just flawless execution. Nothing else. Reminds me, if you guys listen to the Howard Stern show, the guy Elegant Elliot Offen, total weirdo. He used to put on like a leotard and tuck his junk in and jog around New York City in like a bunch of facial makeup. I didn't really understand it, but he had a good way of talking. Like, just flawless execution, Howard 2 times. So he was on the show all the time. I never really understood it. But anyway, back in my commuting days, back in the 90s, the Stern show, it's kind of a big fan. But I've been listening a long time. I just don't really pay for satellite radio. And I don't have time anyway because I'm making videos for you turds. Just flawless execution, nothing else. But here's the best part. Profitability. SoFi's profitability stole the spotlight in Q4. Let's work our way down the income statement. And you guys can see this for yourselves. Contribution profit margins. Lending contribution profit was 226. Tech was at 31 and financial services was at 25. So still obviously the bulk of the profit coming from lending, but the other two segments were up considerably, and those just became profitable. So that's a great year. As a result of improved profitability across all three business segments, generated 48 million, GAAP net 4, a significant jump compared to their 40 million loss a year before. So that's a huge swing, 2 cents, beating analysts' estimate of a break even. Total operating expense as a percentage of revenue dropped 1,700 basis points. Sales and marketing expenses, revenue percentage of revenue dropped 1,000 basis points. Those are extremely important numbers. Adjusted EBITDA, which is a proxy for cash flow, was 181 million, adjusted EBITDA margin of 30%, up 1,200 basis points year on year, reaching management long-term target of 30%. So they just have to continue to execute. They're already where they need to be on EBITDA, which will flow down to the bottom line. You just got to give it a few quarters of growth to basically even out those amortization and stock-based compensation expenses, and you will do that. You will grow your way out of those. That's the whole point of EBITDA. I know Charlie Munger and Warren Buffett hate it, but I love it when it serves my interest and when it makes me look good as a SoFi cultist and pumper. Pardon me, I almost died. Oh, there we go. I'm all better. So guys, I got to get off this live stream. I want to get through one more article very, very quickly. Is anybody still here? Outdoor Creations are here. Here I am. Is when is this thing road opera? You guys want to hear the rock opera? All right, I'll do it tonight if Princess J will let me. I finished off the David Bowie part. We are starting out with the Black Parade. Going to Spack in the middle. We're going to Billy Joel, Chamath Be Right. We're going into some live. Lightning Crashes. Where are we going next? Yeah, we got a few songs, guys. The rock opera. I did say I would perform it if they hit the 3 cents. We missed by a penny, but I'm still gonna be a man of my word and do the SoFi rock opera live, and it is gonna be gloriously horrible, and I will lose all of my 3 subscribers. But screw you guys. I'm going home. I hate you guys, especially Kyle. Anyway, guys, hope everybody's doing well. Sorry I haven't read the comments. My brain don't work so good. Manny's weight loss is here. Alex is here. Flint Creek, of course. Not a lurker. Alberto. Hoodie. Yeah, we're going to try to do the rock opera tonight, Hoodie. It's not easy, man. I don't have a good voice. The songs are terrible that I wrote, and I thought everybody was going to be really in a great mood from earnings. We'd have the pump. I'd do it, and it would just be hilarious. And maybe somebody would catch on. Maybe somebody matters. Maybe we get Anthony Noto, my biological father, to finally acknowledge me. But I'm still going to do it. What the hell? What's the diff? I look like an asshole anyway. So anyway, adjusted EBITDA margin was 74%, meaning there's still much more room for margin expansion moving forward. In short, management promised and they delivered. Simple as that. Take a look at the charts above. They talk about the balance sheet. They talk about the loans, deposit. Loans grew by 1.6, deposits grew by 2.9, and debt shrank by 1.1 billion on the quarter. If you haven't noticed, deposit growth outpaced loan growth, meaning they could fund all those new loans with deposits, which enabled SoFi to reduce its debt exposure, resulting in lower cost of funding for its loans. As such, SoFi's net interest margin expanded to 6.02%. God, that's beautiful. In addition, SoFi maintains a stringent credit policy, excluding loans only to high-quality credit customers. Median FICO score of 744. Okay, that's down slightly. That's down slightly from where they were, but it's still very good. It's still very good. It's like when, Kingpin, he's like talking to the fake preacher, and he's, drinking a whiskey. He slaps a waitress on the ass. He's like, bowling for money's my only vice. And he takes a drink, and he's like, well, 2 vices. Like, that's still very good. As you can see, Q1 adjusted net revenue expected 560 million, up 22%, which is a material slowdown for Q4's growth of 40%. Again, Q4 is the best. We all know that, but management expects Q1 is lower than. Just be careful with this, guys. Management is expected to break its 11-quarter streak of record adjusted revenue. Due to a sequential drop in management expects lower profits as well. They adjusted EBITDA 21%, which is down 9. Unfortunately, management expects to maintain GAAP net income profitability with a net income of 20 million for the quarter. I think we're going to do at least as well as last quarter. All those new members are working. There could be uptick in home loan activity. I think we might see that uptick in student loans. Just keep the spending down. Don't worry about the aggregate member growth. That'll take care of itself. Keep making money. The growth is there. The growth will be there. Keep treating customers right. Keep making money. I don't care if growth this year is 33%, 26%. It's just I want quality growth. I want quality members. I'm not in a sprint, guys. I'm not necessarily in a marathon, but I'm in like a middle distance race. I'm in like a nice 5K. That's my specialty as a very fat man. It's just that middle distance. You just find a nice tall hill and I just get in the fetal position. You just roll me down. Fat man down. It's like Black Hawk down. We have a fat man down. We have a fat man down. We're gonna need a gurney. Um, you got no Tom Sizemore. Why isn't Sizemore ducking? He's like, he doesn't hear the shots. He's like, no, he just doesn't give a fuck. That's part of being the character. His bullets are whizzing around him. He's like, in any case, guys, my kill is here. SoFi now fluctuating between 10 and 24.99. I'll take it, Mike. I'll take any fluctuations above the sphincter levels we're currently sitting at, because it smells down here, guys. It smells south of the equator. It's not pleasant. You don't want your stock to be at a sphincter basis. It's bad. In terms of full year management, so you guys can see the projections, 50-50 revenue split between lending and the other two segments, which would be excellent diversification. 2.3 new million members added, which would be just under 600K per quarter. I think that's a little low. That would be kind of on average what they just did. I think they're going to do above that. Based on the assumptions, I've calculated an estimated 2.5 billion adjusted net revenue for 2024, which is about a 20% increase. Big slowdown. I think it's going to be more 2.7, 2.8. In terms of flux capacitors, yeah, Morgan Fudley. 2024, blah, 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 net income 105 million, adjusted EBITDA, they already hit the adjusted EBITDA margin of 30%. So that looks really good. I don't know where they're getting these projections. I know, Noto's projecting low, but if he raises 3 times, you're going to see that top line. If he raises just like 5 million, 6 million per quarter, they're going to have, growth more around 2.7 billion, 25%, whatever it is. So second, given macro uncertainties, management is intentionally limiting growth to its level beyond capacity. Third, they're intentionally limiting loans. It's not demand constrained. It's not balance sheet constrained. Didn't you fucking idiot Midwest Values? Didn't you just read that they got more deposits than they originated loans? You fucking simpleton. What, did you take too many blows to the head while they were hazing you? God. What is wrong with these fucking five heads? In their outlook, the growth is entirely coming from its existing businesses, and they're going to be adding different stuff. They're talking about adding business, talking about adding. If the opposite were true, each of these reasons above, we could see SoFi easily beat their guidance. In addition, management has a history of sandbagging guidance, so don't be surprised if we see SoFi out these expectations. They talk about stock price, they talk about valuations, P/E ratios, 10x, incredibly cheap. Some might argue it's inappropriate to value banks using revenue multiples. So here's the more traditional metric, price to tangible book value. And they go over this, but it's against JP Morgan, Bank of America, Wells Fargo, etc. But you can see, SoFi it's trading a lot higher, a lot closer to Chase. It's growing really, really fast. Like none of these other banks are growing like this. So quarterly, year-on-year growth. Chase is like the only one growing. I mean, Bank of America is negative 10%. SoFi 32%. Analysts expect 6 cents EPS. Management guided for 7 to 8. I'm looking for around 20, at least 15. In addition, they expect 51 EPS in 2026 when management guided for 55 to 80. So they're not incredibly far apart, at least with management's low end, but management has a history of beating the midpoint of their guidance. So that would be somewhere in the 68-cent range. We'd expect them to really be planning for, if anything, and probably more because they're going to continually raise guidance because they always do. Have they not learned that management has a history of obliterating estimates and guidance? No, they've learned it. They just pretend not to understand what's going on. And so that's the deal. Like they're not immune to facts. It's not that they don't understand. It's that, in my opinion, they're intentionally dishonest as part of a misinformation machine designed to mislead naive, inexperienced retail investors and cause them to give their money to smart money based upon all kinds of clever ruses, psychological techniques, shakedowns, stolen lunch monies, and et cetera, and et cetera. Et cetera, excuse me. I hate people that say et cetera. It's et cetera, you uncultured pieces of shit. We're nothing short of SoFi's Q4 results were nothing short of spectacular. It was another record-breaking performance. All three posting record revenues. Most impressive of all, they turned a GAAP profit. Time and time again, management continues to execute. I will let them do the talking. In the meantime, the stock still trades at attractive valuations with profit expected to explode in the coming years. Bears better be careful. The stock will eventually follow the fundamentals, and the bears will eventually be executed. I couldn't agree anymore, guys. I'm going to save the next article for next time, but this is another good article if you want to choose to reach. It's the Asian investor. He's very, very good, proving all the naysayers wrong. SoFi Q4 profit just goes over the whole thing, but I'm not going to get into that this time. We'll get into it another time, guys. SoFi, of course, on Friday was up 15 cents, gave back half of it in the after hours, so we're going to come into next week at $7.80 or whatever the fuck we're going to do. Volume was a lot more reasonable at just over 53 million. That's a much more nice bullish volume, but it was the same thing the week before earnings when we were getting kicked around. The bottom line is they can control the volume, they can control the borrowing, they can control the stock. What we need is institutional investors to come into the stock, stabilize the price action, take shares off the table, take emotional returners out of the equation. Guys, I appreciate it, guys. Thank you. Yes, Princess J is doing her absolute best. It is not easy for her. She is a wonderful, incredible woman whom I appreciate more and more every single day. And on that note, guys, I also appreciate all of you. It's a hateful appreciation. It's a hateful, begrudging respect that I have for you, the Turd Army, my audience. Flint Creek Soap Company, thank you so much. Send Princess J some goddamn samples. She's in the soap game. She would love it. I'll send you a sample of some of my horrible jokes. It'll be an even trade. Anyway, guys, I really appreciate you tuning in on your Saturday. Hope you're having a great one. If you're out here in the California West Coast area, you are about to get absolutely douched with 7 inches of Pineapple Express rainstorm. No jokes there about 7 inches. But anyway, guys, what was that they said in the town? Is like, Mr. 3 inches. Like, anyways, to John Hamm. Anyway, guys, yes, everyone thank Princess J. I worship the ground she walks on. She is amazing. I like the SoFi stock, guys. If you didn't know that, I'm bullish the stock. Thanks for joining me. Really appreciate it. Hey, it's David Redliner. Peace of where the hell's Jason Joseph? Somebody find me Jason Joseph. I don't know what to do without me some Jason Joseph. Anyway, no, I just like saying Jason Joseph. I don't know what happened to him. Thanks for tuning in, David Redliner, Flint Creek, Dudas Face, Alabama. Thanks a lot, guys. Appreciate it. Everyone else who's up here, really appreciate you. It's un poco mas. My name's Danny Deals. Also want to thank Noto, a.k.a. J Money. Appreciate you spending time on a Saturday to keep the turds in control. Peace. We're out.